Hello, traders. Gary Wagner with the Gold Forecast. Today's date is the 24th of August. It is Tuesday, and this is the daily report. Wild swings, double digits to the downside, double digits to the upside in terms of the moves all in one day. It has been one of the more volatile days that I have seen in this market. And Forex Gold currently at 1229.23 and COMEX at 1230.90, and that's basis December. As you can see from these candles here, we have had one extreme range. Yes, this isn't a typo, it isn't a misprint, and it isn't a bad data block. This market, as I was looking at it last night, interestingly enough, kind of looked like this. We had this long, as it was at these lows, we had this long down day, and this candle was utterly black. It was coming to the downside, and as a matter of fact, what I was looking at was actually adding in wave C because I felt that was the absolute confirmation that we needed. However, that wasn't to be. As you can see, this market genuinely has had so much bullish potential that it did come down. It traded below 1217, which is our 23% retracement level here, and then broke all the way to about 1211. 1211 is a very important Fibonacci number for another retracement sequence, and I'm going to talk to you about it in a little bit. But once it did hit that point, it absolutely found bargain hunting, buying the dip mentality, and that market came and drove itself back up very quickly. The interesting thing about gold right now, I'm going to put up the daily charts, is just how quick that rally took place. Let me show you what I mean, traders. What we're looking at right here is a 30-minute candlestick chart. And as you can see, it was trading in a fairly quiet range at around 1222. It then broke and traded a little bit lower, but kind of settled at 1220. Traded there for a while and then broke very hard down to 1210. Now, it didn't spend too much time there. These are half-hour candles, because what happened is we got this piercing line, our confirmation here, and then here in this 1 hour period, it went from, just in terms of the range, from below 1218 to above 1231, all in a 1 hour period. Incredible activity within the marketplace. Traders, I have to acknowledge, this has been one of the more perplexing or wild trading days that I've seen in the market in quite some time. Not so much that we were expecting a correction, but we did have unique candlestick patterns. We had follow through, and then we had massive selling coming into the market, which drove it down to, as I said, about 1210. But what we do have is this umbrella line. Umbrella lines are incredibly significant, and let me explain the psychology behind the umbrella line so you can see just how powerful it is. Take, for example, this particular paper umbrella. It can be called either a hammer or a hangman. It's called a hangman when found at the top of the market. It's found a hammer when found at the bottom. What makes it so significant is the fact, and color is typically unimportant within the body. But for example, on this candle here, you have the market open, and then it trades a little bit higher on the day, and then at some point selling ensues. And as the selling ensues, it has the kind of momentum that actually pushes this market down to make these series of lows here. But we witness something different, and what we witness is that buying enters the market, and as buying enters the market, it takes it off of these lows and then begins to drive that price back up to a point where it is currently above the open of the day. So the fact that there was so much buying opportunities and buying the dip mentality that happened in these lows to push it back up is what makes the paper umbrella, the hammer hangman, such a significant candle. Now, typically when found at the top of a market, it is called a hangman. However, it's a very interesting strategy in that the market has definitely been in a sustained rally. And at the same time, when it tried to come down, it was unable to. In other words, the sellers were able to completely get obliterated when buyers re-entered the market to push it back up to these highs. Now, it has been attempting to stage another rally and in fact got as high as 1236 in the trading session. Traders, of course, we do have a short position. We also have stops at 1240. We came close, but our stop is still intact. However, does this type of candle cause me to reevaluate our strategy? Well, it certainly causes us to take note. I need to see if there's going to be follow through. If there is follow through on this candle, they might in fact look at this as an opportunity to push this market higher once again. One of the beautiful things about the NinjaTrader platform is it allows me to take this daily chart that I've worked on and actually compress it and turn it into a weekly. Of course, these patterns that we're looking at are contained within the weekly candle, so you're not going to see those. But the one thing I like about the fact is it shows me what the week comprised of when you break it down into its subgroup or into its daily components. The other thing that's interesting is the wave count does stay intact, so that the waves that we get, waves, 1 through 5, A, B, and C, you'll notice that those stay intact and are absolutely valid waves. And as you can see, you get a nice count here. Now, here's what we're seeing on our weekly chart. This evening, when I looked at it, we had the beginning, when this candle was down here, we actually had an engulfing bearish. So this weekly candle after 2 days has really changed, because during the week, or excuse me, during last night, it looked like this and was extremely, extremely bearish. And I thought we absolutely had the kind of follow through that I was looking for. However, that wasn't to be the case. And as you can see, it's now back into the small bodied candle, meaning it opened here at the bottom on Monday, is currently trading here on Tuesday. As this week progresses, if it stays red, of course, it's going to move up. If it does go bearish, it's going to then begin to move down, and we will get either our dark cloud cover or our engulfing bearish. We're just going to have to see. I have to acknowledge, traders, that on today's activity, the magnitude or amplitude, I should say, of the buying that ensued in the markets, I felt was extreme for what we were witnessing. And my personal sentiment is right now, we're going to have to see if this buying in here continues and if they can sustain this rally. If they can, it will cause us to reevaluate. I can only go with the information that I have on a daily basis. As new information is made available to me, we have to always be able to be flexible in our outlook of the market, because the market is going to do what the market wants to do, not what we believe it's going to do. As I said, let's see if this rally can be sustained. We have our stop sitting in the market. I don't believe that there's any reason to react just yet. We'll see what happens through the trading day tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.